Good day. Ira Epstein of Linn and Associates with your metals market update for this Wednesday, the 23rd of October, 2019, and just after 4:10 p.m. Central Daylight Time. A lot of earnings reports today. The stock market having an update today. Metals were up as well. In metals, I'd be keeping my eye on copper to a degree, and the reason is that Chile's president, I think his name's Pinera, if I'm saying it correctly, made some promises today, apologizing to the populace, saying that he's going to increase the pensions, going to tax the richer of the class down there, so on and so forth. Not bad things, but more copper mines are going out on strike. And as that's happening, you got to be careful. Codelco is one of the state-owned mines, and one of their, I think they have 6 or 8 operations there, but I know one of them went out on strike today. It could lead to others. As you take a look at foreign currencies, a mixed bag. Nobody quite knows what to do with the British pounds, and that does impact the metals because it's a direct impact. What if there's a hard Brexit? What if there's no Brexit? I mean, which way do you go with that? On the energy markets, we had a rally today. That gave an uptone to a lot of the different commodities, and that's because the EIA numbers were so good. But in metals other than the copper, I didn't see an awful lot in the way of new news. So let's go to the weekly area chart, and so far you can see the market continues that path of trying to break down. I'm still not going to back away from what I said. We could be headed towards that 18-week moving average of closes, that 1475 level on a weekly chart. What it would take is you probably got to settle up and over this area, and I'll show you right here. This settlement price of 1518 to make traders think, all right, maybe it won't be able to get down there and it's going to start its way back up. Barring that, the thrust is still to the downside, although the bias, and I define bias as where's the market close in relation to the 18-week average of closes, as long as it's over it, I say the bias is up. When we come to a daily bar chart, I don't think you're going to disagree that we've just gone into a sideways pattern right here. Now, trying to read what that's doing can get difficult at times. What we have is a pattern of a lower low, and with today's rally, a higher high. I was disappointed today, to be honest. I was hoping when the market got over that high that it'd have legs to it and continue up. Instead, it got over it by maybe $1 or so, and then just sort of petered out. It got to 14.99.40, 14.98.70 was the prior high, and this market just died in the water. And if you take a look, the 18-day average of closes is 14.97. The settlement today, 14.95.70. As I stand back here, you can see it even easier. Didn't excite me. I wanted to be friendlier this market than how the settlement ended up. We're caught in between 2 levels of support if you break down. I think that you'd find support in the 1475 to 1466.70 level, the lower Bollinger Band down to the green line, which is the 100-day average of closes. Even if you now move up over 1498.70, the way that the pattern's set, first of all, I can't get a bear signal yet with this pattern because I have a higher high. Even if you take out that low, I'd have a higher high, lower low. Now I can't get a bullish pattern because I've got a lower low and the higher high. And if you just continued up, where are you going? Well, I could argue you're going to that magic number where I just said, that resistance zone at 1518.60, but right now we're sort of stuck against that 18-day average of closes. Momentum, well, it's trying to get itself away from being oversold, and it succeeded in that today. If we go back to yesterday's reading, you can see it had one of the numbers under 30. Today you got rid of that reading, which means momentum is flattened out. That's not because you didn't close over the 18-day average. It's a disappointing close. In GLD, you were up 37 cents at 140.57. The 18-day average is 140.63. Darn it, it's mirroring what the other one did. Today's high was 141 in this market, which took out the 140.76 level. Pattern's identical to the futures, even so much as you're stopping the decline in momentum, but you haven't turned anything up. And you can't get a bullish or bearish signal because of how this thing set itself up today. In GDX, you're still in the bear phase of the market. Admittedly, you're oversold. The pattern, though, is lower highs, a lower low. It missed out on getting to the lower band, but it's got formidable resistance at the 100-day average and the 18-day average of closes. Let's assume the market were able just to go straight up from here and get through this 2730 level. I'd still be stuck with the lower low. So in order to get the market favorable, at some point you got to take out today's low and then move higher. I don't know if that's going to happen. The gold-silver ratio has paused. I wouldn't be surprised if the ratio gets back up to 88:31. What would turn the ratio back in the favor of the silver is closing under this number, 84.54. Then I could argue, okay, we're starting that pattern of lower highs and a lower low close, and the key is under that. Other than that, I can argue that you're going back to 85.31 to fight a battle. And you can see in silver, the market finished today at 1758. The pattern, yes, you do have going home higher lows and higher highs. That's bullish. The market closed over the 18-day average. Therefore, the bias is up. Momentum's flat. The problem is it didn't do it in any meaningful way. So if this market takes out 1744 instead of the 1742 number I was concerned about earlier, you could still end up with lower highs, lower lows, setting up a test of 1719. Let's assume the market doesn't get under 1744. Well, the bulls are in control right now, and that puts the 1790-70 level as the next upside resistance zone. So you're at a very, very important area. In the copper market, back to the Bollinger Band. So you're fighting a battle, and here's your battle zone. The 100-day average up to the upper Bollinger Band. Today you drop down first, had that reversal as we saw Codelco go out on strike. That's what I think it got tied to. And the market made higher lows, higher highs. Again, runs to the upper Bollinger Band, has trouble there, finished 267.15, literally right over that by about 30 points. So you're fighting a pretty big battle right here. We'll see if the market can go anywhere. In terms of the slow stochastics, well, both numbers were over 80 today, but not yesterday. You're purely in an overbought area. I think there was a reversal today in the platinum-palladium spread. Now, I am not saying that that's something I follow every day, but I look at it. Been around this game 50 years. That's been a popular spread. What we did is, let's take a look at yesterday. If we look at yesterday, this high, 902.40, if we come back to the old high right here, that's 906.90. So we still had the pattern of lower highs and a lower low. But what the market did today is it dropped, well, actually yesterday, it drops down, takes out that low. So now if you take out 902.90, what you could end up with is higher lows. Taking out this high would give you a higher high. Who's in control going home? The bears were, you had divergence because you're starting to get momentum up, the bias is down, and you're fighting at that 18-day average. Today you went through it and got to the upper Bollinger Band. On the settlement, you closed over that number by $10. That's quite a bit. You closed literally at the day's highs, trying to push that out, but you're overbought in the process. I got questions how much length to this rally there'll be, but what I think happened is you knocked this market down, and in the process you lost the embedded reading on the close. You have a 79.90 reading, and prior to that, what you had is this market just staying over these 80 readings, as you could see. It was an embedded reading. Maybe this is where you're getting some profit taking coming in. What I'll be looking at is, let's assume the market wants to break down. You have the lower high, lower and low pattern, so that's bearish. It's countered because you're over the 18-day average, so the bias is up. The two nullify each other. But what rules the day often is the slow stochastic. Two things can happen tomorrow. First thing, you re-embed, so the market reverses price, gets over today's high and starts looking strong. That might be enough to re-embed the market. Second, none of that happens. The market goes sideways to lower. That puts into play the objective of the 18-day average, which is we've been hitting it has proven to be a support area. I think the kiss of death on the market was I was reading a market report this morning. Remember, I get up 4:35 in the morning and I'm reading like a madman because I'm putting out my morning subscriber video first thing. And they're talking why palladium's up and it's the best performer of the commodity markets in 2019. Prices up like 45%. Read the article, I said, kiss of death, brings in all the Johnny-come-latelys and they get hurt. I don't think I'm wrong in that. In the dollar index, the battleground's very clear. It's the 100-day average to the lower Bollinger Band. You have an embedded reading. So the market's got a downtrend, embedded reading, bias down. I still say this is a bear market, and this market it would have to get over these highs right now on this chart pattern of 99.37. Well, that's way over the 18-day average. I'm looking for pros to sell these rallies until you lose that embedded reading. So you put it all together, what an interesting day. And remember, I created a silver report for everyone, and in that report, it's trend and chart analysis. Now, let me explain what that means. I've done a lot of work on this report in terms of giving you seasonals. So we're going to look at the 5, the 15, the 30 year. Then what we're going to do is we're going to look at quarterly, monthly, weekly, and daily charts. And it's just devoted to the silver market. I make these ads up so I don't have to do a different one for palladium and all the others that I'm doing. How you view the report is you go to www.iraepstein.com under the word research. As soon as you get up there and you put your cursor, a slide down box will appear. You'll see the metals report. Click on it and enjoy it. It comes off probably Friday afternoon, at the very least Monday morning. So it's only up for 5 business days and then we take it down. So that's how it's going to work. Hope you like it. There'll be more to follow it. I'm right now studying which next report I do. Won't necessarily be a metal report. I'm going to do a lot of these. I'm going to try to do 2 a week going forward. Let's see if I can get one done tomorrow. You have a great day.